conversation with the pioneer of technical analysis in India, only on ET Now.
Well, we've been discussing stop losses on this episode, and stops work differently for day traders, swing traders and the long-term investors. So it's really worth a while at this point to try and understand the distinction and how these three different types of trader sets would actually use stop losses. Doc.
See, I would say investors are the ones who must use stop, but they don't use it, but they must. But then they should leave it a little loose. So I'm showing it to you on a chart of maybe Tata Motors, which had this glorious run for the last about year or two. If you look at the chart here, you have this nice big move. So you want to be in it, right? You don't want to sort of exit it prematurely in this. So if you plonk on something like a moving average, I think there's a simple method that all investors can follow. You just need an Excel sheet for this. You don't even need a software. So just put on a long-term moving average, and as long as it is not violated, stay with it. But when it does get violated, get out of the stock. Because this is the simplest way that a long-term investor or any kind of investor can use it.
So 50-day, 200-day?
I think for a nicely trended stock which is moving aggressively, a 25 period will work very well. And for a little slower moving but also still trended, a 50 period will work very, very well in it. These are of course generalizations. But now moving on to, let's say, a swing trader and a day trader. For a swing trader, I would like to go back to the example that I showed you as the average true range. The ATR reading we said on the daily chart for the Nifty is about 120 points. Now a swing trader typically is looking at several days of a trade. So for him the daily ATR reading would be something very, very good. 100, 120 point from where he starts off. So let's say he creates a position at 5100 and let's say the ATR is 100 points. So he sets a stop loss 100 points below. And as the prices move up from every day's low, he can, sort of subtract 100 points so that it keeps on moving higher, right? But when it comes to a day trader, he can simply go down to, let's say, an hourly chart here. In the hourly chart, you'll have the same sort of reading of the ATR, but now you see the value of the ATR has actually dropped to something like maybe 35. So for a day trader, he can't really afford a 100-point stop. That's like far too much because you don't have so much of a movement. So for a day trader, he can use the same sort of tool using the ATR value on an hourly chart or a 30-minute chart where it will be between 30 to 40 points. So use the same way, buy the stock, set a stop
below the ATR below the low.
The ATR below.
Well, covered a lot on this stop loss special time for our trader profile, but today we've asked traders really what stop loss means to them and which is their favorite way of putting stops.
The outcome of the trade is an unknown when you enter it. It will often go the other way.
All strategies work only part of the time.
So when you're trading, you will enter a mix of good trades and bad trades.
A lot of external as well as internal factors, global factors commanding on the markets.
How much money he or she is willing to put on the table, and that is the final amount.
And stop any further erosion thereafter.
If you don't keep stop loss, it's like driving a car without a brake.
Whichever time frame you are trading, whether it's intraday, swing or even long term.
How do you fix a stop loss? It's a question depends on how much risk you are able to take.
There are many ways of putting up stop losses.
If my target is say 100 rupees, then I would like to keep maximum stop loss of 50.
Simplest way is to take a bottom, the previous bottom from the chart.
A typical stop loss should be kept just below the support level.
If you're an intraday trader, you would look at an intraday chart and pick out some bottom that's formed in a 5-minute chart.
I will use a major positional support as my stop loss in case of a long trade.
I generally tend to use 2% of my capital as risk.
Thumb rule is 1:2 ratio.
You get a stop loss which is very close to the price you enter. You can get by more quantity because it will result in the same kind of rupee loss.
The importance of the stop loss is paramount.
When you are wrong, you need to take measures to protect your capital.
A stop loss is absolutely mandatory for traders.
I would, definitely watch for it.
Stop losses are extremely important.
Stop loss are very important.
Always keep a stop loss.
Okay, time now for chart of the week. And Doc, which chart have you picked?
Okay, the chart I've chosen for this week is from Prashant Sarnaik from Akola. Prashant has sent in his views on 3 charts, which is Ultratech, VIP and LNT. Coincidentally, I also have another entry on Ultratech from another viewer. But between the two, I have actually chosen Prashant because he seems to have done a kind of holistic analysis. Everything is all right, Prashant, except for one sort of minor blip in your analysis on Ultratech. You seem to reveal a slight negative bias. Now, your base is negative bias on the fact that, Ultratech has been showing, let's say, a multiple level kind of resistance at about 1100 and 2030. And, but then you are taking a view that, this resistance is going to work again and that the market or the stock is going to go down. I think at such points of time, it's better to allow the market to sort of decide what it wants to do. Particularly because in the case of Ultratech, as you can see on the chart and on the weekly and monthly chart, that this is the fourth or the fifth time that the resistance at 1100 plus is being reached, and as it reaches into those areas more and more, the amount of resistance or supply which is available at those areas actually become lesser and lesser. Also, another point which you have missed is the ascending triangle pattern which has been forming in the recent months, which actually increases the probability of an upside breakout because of the formation of the pattern. Third thing which you have mentioned in another particular context, which I think is slightly erroneous, but which you have missed, is mainly that, the momentum build-up is pretty good, but you have chosen to harp on a very, very small signal, which is the MACD histogram. MACD histogram, you must realize, is a very, very light and very tenuous kind of signal, which is more trading oriented and not long-term investment oriented. So considering all that, you have overlooked the possibility that, Ultratech could also break out on the upside. Should take a look at the peers, ACC, Gujarat Ambuja, all are doing pretty well. On the verge of similar breakouts, Ultratech is a very widely owned stock from institution, etc. So I think there is a possibility that you need to consider here that the stock could also break out upward, and if it does so, it has substantial room on the upside. The target of the ascending triangle, for example, which has been pointed out by the other viewer, comes to about, somewhere around 1500 rupees. So try to avoid the bias and try to keep it fairly neutral and based on what the charts are saying.